Finding your dream home before you have sold your current one is a common challenge in the 2026 real estate market. You might be wondering how to access the equity in your home to fund a down payment without waiting for a closing date. Today, we are comparing two of the most popular financial tools for this exact situation, which are the home equity line of credit and the bridge loan. The HELOC option, a home equity line of credit, or HELOC, acts much like a credit card secured by your home. It allows you to borrow against your equity on an as-needed basis. One of the biggest advantages of HELOC in 2026 is its flexibility. You only pay interest on the amount you actually draw. If you already have a HELOC in place, it is often the cheapest and fastest way to get the cash you need for a new deposit. However, you should remember that most HELOCs have variable interest rates. This means your monthly payments could fluctuate if market rates change before you sell your house. Also, some lenders may not approve a new HELOC if they know you are planning to list your home for sale very soon. The bridge loan option, on the other hand, we have the bridge loan, which is specifically designed for this transition period. It is a short-term loan that bridges the gap between the purchase of your new property and the sale of your old one. Bridge loans are excellent because they often allow you to make a non-contingent offer, which is a huge advantage in a competitive market. Lenders of bridge loans usually look at the equity in both homes to secure the financing. The main downside is that they typically come with higher interest rates and higher closing costs than a standard HELOC. They are meant to be paid off quickly, usually within 6 to 12 months once your original home sells. Which one is best for you? Choosing between them depends on your specific timeline and financial health. If you want lower costs and already have the line of credit open, the HELOC is likely your best bet. If you need a large sum of money quickly to secure a new home and your current home is not yet on the market, a bridge loan provides the specialized structure you need. In 2026, with fluctuating inventory levels, having your financing ready can be the difference between winning a bidding war or losing out. Talk to a mortgage professional to see which of these paths aligns with your long-term equity goals. Tabiki, Busefer Kanuda Okberstreitji Rebri Evelyn Satins Resindiki Psychologic Vi Finansal Karar and Plana Karar Kazalat. Yin Satis Verbal Vi Note to Kulinorak Usen Bermethanol Cherdum. 2026 Home Financing Strategy HELOC versus bridge loans. Navigating the real estate landscape in 2026 requires more than just finding the right house, because you also need a sophisticated financial strategy to secure it. Many homeowners find themselves in a difficult position where they have found their next perfect home, but their current property is still sitting on the market. This creates a liquidity gap that can be stressful if you do not have a plan. Two primary solutions exist to solve this problem, which are the home equity line of credit and the bridge loan, and understanding the nuances between them is crucial for your financial success. Exploring the HELOC strategy, a home equity line of credit, is essentially a revolving door of credit based on the value of your current residence. The primary reason people choose a HELOC in 2026 is the cost efficiency. Since it is a line of credit, you have the power to decide exactly how much you want to borrow and when you want to borrow it. If you only need a small amount to cover a gap in your down payment, a HELOC allows you to pull just that amount. This keeps your interest expenses as low as possible. Furthermore, the closing costs for a HELOC are generally much lower than other loan types. However, the risk factor involves the repayment structure. Most HELOCs require interest only payments during the draw period, but you must be prepared to pay off the entire balance once your home is sold. You also need to apply for this well in advance, because banks are often hesitant to grant a HELOC once a home is officially listed for sale. The power of the bridge loan. If you find yourself in a high-stakes bidding war, a bridge loan might be your strongest weapon. This is a specialized short-term loan that is specifically built for people who are buying and selling simultaneously. Unlike a HELOC, a bridge loan often allows you to cross-collateralize both your current home and your future home. This can give you access to a much larger pool of capital, which is perfect if you are moving into a significantly more expensive property. In the fast-paced market of 2026, being able to make an offer that is not contingent on the sale of your current home is a massive advantage. Sellers prefer these offers because they are seen as more stable and guaranteed to close. You should be aware that the interest rates on bridge loans are typically higher than traditional mortgages or HELOCs, but most people see this as a temporary cost of doing business to secure their dream home. Making the final decision, the right choice ultimately depends on your debt-to-income ratio and how quickly you expect your current home to sell. If you live in a high-demand area where homes sell in a matter of days, a bridge loan is a fantastic short-term bridge that minimizes your stress. If you prefer to have a safety net and want to keep your carrying costs low, a HELOC provides the flexibility you need. Regardless of which path you take, you must ensure that your total monthly debt remains manageable during the transition period. 2026 is a year of opportunity for those who are prepared, so make sure you consult with a specialized lender who understands these specific products. Having your financing locked in early will give you the confidence to move forward with your next chapter without looking back. Qu'est-ce que nous risque examen perspective in L. Allen, professional beryater available F. Sahibi Taninda Hasalab. Yin satis verbal v nope to culinarak, oldukat usen bermetin olcherdum. Mastering the transition, HELOC versus bridge loan strategies. Moving from one home to another is one of the most significant financial maneuvers you will ever make, especially in the complex market of 2026. The biggest hurdle is almost always the timing, because it is rare that your current home sells at the exact moment you find your new one. To prevent losing your dream home,